Okay, so welcome to the webinar. Nice to see you guys. Happy Thursday to one and all. Happy Thursday. Okay, so one thing, thing number one is I've been working tirelessly, probably not so tirelessly. I'd like to make it sound like I am putting a ton of time into this, and I am a bit. Here's a couple of videos about option things that we have talked about, right? So there's a little list of videos. They're 10 to 20-minute long videos of the option trading strategy and everything that we've discussed in so many of these webinars. We've been doing these Thursday night webinars started. I don't know when they started, but I think they've been going. I think at this point we have about 35 or 36 webinar recordings. So that's a lot. We've talked about a lot of stuff. We've covered a lot of details. Most things that we've talked about, I've covered 2 and 3 times because I continue to get questions about them, which is great. That's why we talk about this stuff. Yeah. So anyway, I wanted to kind of break up a lot of what we've discussed in these webinars in that list that I've just posted for you there, which is just, some of the basics of calls and puts, why we're option sellers as opposed to option buyers most of the time, naked puts, covered calls, credit spreads, my strategy. And kind of the basic things that I look for as far as how to find options that I want to trade. So there's that. So have a look at that playlist of videos. There's about 7 in there, and I'll put another 1 or 2 or 3 in over the next couple of days. We'll get that going. I'm going to get a similar list for all the currency side of things as well. So we've got that. Last week, I thought we had a great webinar. I wanted to stay very much on task last week. There was probably 10 people that I didn't answer your questions because they kind of would have taken us off the track of what I was trying to cover very specifically in our webinar last week. So I decided, we've never done this in the last 36 webinars or so that we've done. We haven't done this, which is just, I don't have anything planned today. Now, I've been trading for 20 years. I can talk for 4 hours on one thing. So I don't have anything planned today. I thought about all the things, all the questions I've had this week and everything. And I just thought, you know what I want to do? I want to answer your guys' questions. I just want to, we're not going to have a specific format here. I want to answer your questions. I'll try to keep it as organized as possible so we're not all over the place. But I just want to answer your questions. If I don't know the answer, I'll tell you I don't know the answer. But probably I will know the answer, and we can talk about them. And so let's get some questions going. Your burning questions. There were some good questions, good comments last week that I couldn't get to. Last week we were corona'd out here at the house. My wife, both of us tested positive for coronavirus. I had no symptoms at all, and my wife got, mildly sick, but she was locked away in her room because we didn't want our kids to get it, so they'd have to stay out of school longer. So I think I was tired. I think I didn't want to answer any questions anyway because I was exhausted. But now I think we're corona free in the house. Who knows? Maybe we are, maybe we aren't. But it was a pretty pleasant experience, all things considered. I was tired though. My kids had to stay home from school for 2 weeks. That was a bummer. Okay, so let's talk about questions. Mel's got a first question here. Money management for options. How do you keep from blowing up your option account? Seems like a lot of calculations. Good, thanks, Mel. Good last week, no problem. Okay, Mel, it's actually money management with options. One of the great things about options, now Mel, you trade options and you trade currencies. In our trade group, we obviously do both of them. It's actually a lot easier to blow up your account with currencies than it is with options, right? As far as options go, one really good thing about options is the fact that you're not on the hook for an infinite amount of loss, except for one occasion, right? So if, for example, risk is a bit undefined in Forex. Jim, that's a good question, and we'll get to that one next. That's a very good question, Jim. So as far as option money management goes, remember this little situation right here. It's, in the strategy that we use in the group and everything that we do there, we're the only time we're going to be in trouble is if a stock goes bankrupt, right? And you can manage that through a stop loss or through just closing a trade out or whatever. Chances of one of these stocks going bankrupt that we're in is pretty slim because we're trading these high volume, big, good stocks, right? So we don't have that as such a risk. So remember, whenever you trade something like a credit spread, here's a credit spread. We have this trade running in the group, US Steel. In a worst case scenario, when we get into a trade like this, here's the trade, and we're saying, okay, our max risk is $50. If the stock goes bankrupt and I have this credit spread, I'm only out $50. I can't lose more than $50. The downside is I can't make more than $50. Now, if I turn this into, at some point, if we say, okay, this is getting to the point where I want to close my long put, right? I'm just going to be left with that naked short put, and if we're talking kind of risk management on that, same kind of thing here. You could say, well, I can make $117 here, or I can risk $1,783 there. That, of course, is assuming that US Steel goes to $0. So risk management's very in options. It's so easy because in most scenarios, we just can't lose that much money, right? Where we do lose a lot of money, and this is why we don't do this so much in the group, is you can lose a lot of money in buying options, right? If I buy an option on, a call option on US Steel, it's a cheap option, so I'm not going to lose a ton of money. All I can lose on US Steel is $104. So if I do nothing, if I have no stop losses, if I do nothing, all I can lose is $104. I don't like buying options because this kind of thing happens a lot. What's a nice, good, expensive stock? I mean, if you look at Tesla, for example, if I buy a call option on Tesla, I'm certainly on the hook for a lot more money. Now that option could cost me a loss of $6,040, right? And that's why I don't buy options a lot. That's why we stick with credit spreads so that our risk is very, very easy. I put a credit spread on here. I can make $138. I can lose $112. So as far as the risk management with options goes, we're always either trading a covered call where we own the stock. If the stock goes down a whole bunch, it's fine. The stock will come back most of the time. We're going to be okay. We own the stock. It's no problem. We're not going to owe the broker money. We're just going to have stock that's worth less than where we, maybe initially paid for it. The places that you can lose a terrible amount of money is, number one, buying options on very expensive stock like Tesla, Amazon, whatever other, Netflix, other stocks that are really expensive. Buying options on those is pretty much 100% a bad idea all of the time, because the risk is a lot larger in that aspect. So we're never going to do that. So our risk is going to be pretty good. The other thing where you can have some pretty unlimited risk would be selling a call option, right? If you said, I'm just going to sell a naked call option, then the broker will do a very good job telling you that your maximum loss is infinity. So we're never going to sell a call option. We're pretty much a naked call option. We pretty much never want to just buy a call option on these more expensive stocks because the risk is terrible, and that's the kind of stuff that we kind of want to stay away from. I don't know. Does that answer your question? Does that kind of, otherwise the rest of it, buying stock, covered calls, credit spreads, naked puts, our risk is very defined, and we never even need to use stop losses on that kind of stuff because we're never going to lose too much. If you attempt to sell too many puts, does the platform just stop you when you run out of option or stock buying power? Yes, it'll tell you. So if I say right here, okay, on Tesla, I don't know how much money they would make me have in Tesla to start selling a bunch of naked call options because my risk is undefined. And so they might make me, I might need to have a lot of money to do that. So, yep, as long as you stick with covered calls, credit spreads, naked puts, you're good. Risk is not going to ever be a problem for you if you stick with those things. Okay. Now I got to go back here a little bit to Jim's question. How do we calculate the $100 gain at opening of the trade? So Jim, I think the question that you're asking here is one of my criteria, which I think is this guy right. Boy, what is it? Where did, oh, is it here? I went away from my stuff. It might be. No, it's not that one. Where? Hold on. I was trying to do that, but anyway, probably. Where's my big example chart? Anyway, yes. Okay. How? Why am I having such a hard time with this? Credit spreads? No. Anyway, you're talking about. Well, I think what you're talking about, and I'll go back to it here right now, is when we trade. When we go for an option trade, right? When we go for a credit spread, like we do so often. Oh, now I'm not going to be able to get into my darn trading account. What's going on here? This is where they love to do maintenance. They do lots of maintenance here. Can I get in? Oh, there we go. I'll just back my way into it. Okay, so what we want to do when we're trading a credit spread is we want to make sure, number one, we want to make sure it's a stock that we want to and can afford to own, right? And that's such an important part of it. This is why we have made money on 100% of our stock and options trades in the group, is that we're trading stocks that we can afford to own, and we're trading stocks that we're okay to own, that we're happy to own. And part of the reason that we do all this is we do this right here, where before I get into a trade, I want to look at a chart. I want to make sure that the chart looks good and that everything makes sense. And the other thing I want to do is I want to go over here and go out about 2 weeks and say, okay, is an at-the-money option paying me enough? Because chances are I'm going to have to sell an option on this. Chances are decent. I'd say maybe 50% of the time we get assigned the stock, and then we turn it into a covered call. So I want to make sure that if I do turn that into a covered call, that I have a couple of things in play. Number one, there's lots of expirations, right? I want weekly expirations. I want strike prices that are no more than $1 apart. And I want to make sure that that 2 weeks out, an at-the-money call option is paying me around $100. Bank of America is a little tiny bit less, but around $100. If you look at, so Bank of America, 2 weeks out at the money's paying $75, $80, right? If we look at, let's just say Ford, for example, Ford's trading just above $9. 2 weeks out at the money option is paying about $35, right? That's not worth my time. I have to have too many shares of Ford to make that kind of worth the money. Now, you could look at it and say, well, Ford is, a third of the price or whatever it is of Bank of America, so that's fine. But as a rule of thumb, I want to trade stocks that 2 weeks out, the at-the-money call pays pretty close to $100. We've done some trades on SRNE. Remember this guy right here? Look at SRNE, an $8 option for $8. Ford is trading for $9 and it's paying $35 for an option. SRNE is trading for $1 less and it pays twice as much. So that's what we want to find. We want to find stocks, or we want to find options that pay well 2 weeks out at the money, so that we're not getting ourselves into stocks and tying up our money in stocks that don't pay us enough money to kind of make it worth our time. Is that the question you were asking, Jim? Does that answer your question? And does that make sense to everybody? Everyone feel good about all that? Questions, thoughts, comments? Jim, is that your question? Hopefully it is. I think it is, and I think it was. So good. Any more questions on that before we move on? Lenny's got a good question. Everyone feel good about that? So the important takeaway from that is don't tie your money up in stocks that don't pay well on the option side of it. Again, SRNE versus Ford is a great example. Both are trading around the same price. This pays twice as much as Ford pays, and it's a cheaper stock. Let's get the most bang for our buck is kind of the goal. So lots of expirations, strike prices close together, pays us as close to $100 as possible or more for 2 weeks out at the money call option. Okay. Lenny, Let's see, Dale. What put would you sell to get into SRNE, for example? Lenny, what? Or sorry, Dale. Our rule of thumb typically for these credit spreads is we'll sell an at the money option, like an $8 put, and we'll buy like a $7 put, right? And that's paying us, you know, that's giving us about a 1-to-1. So usually I'm just going to sell an at the money put either 2 to 3 weeks out to get into the stock. And most time I'll start off as a credit spread. Yep, good question. Yes, absolutely. So anybody that's just joining us, I'm just answering questions today. I'm just propose your questions, talk about an example of a chart you want to see, an example of a trade you want to see, any questions, any thoughts you have. Don't be shy. Don't feel like your question's a bad question or not a good question or a ridiculous question or anything. Just ask away. We're going for it. Okay, Lenny, where/who manages the Forex order flow? Is it all automated? So Lenny, the broker manages our specific order flow. So we have, you know, a brokerage account set up at Oanda, for example. They're going to manage our order flow, and they are passing it on to the big interbank market, right? So we're trading an off exchange, meaning there's no centralized exchange, right? Our brokers are the intermediaries between us and really the big banks. So we're just participating in the big market, which is all the big banks that are sending their orders back and forth. Our brokers are just tapping us into that. That's why we have so much leverage. We have to have a lot of, you have to have a lot of funds to get into that market. So there's no centralized exchange. If you want a centralized exchange, you can trade currency futures through, through the exchange here in the US, the CBOE, but we don't trade that. We trade the heavier, bigger market that is run and controlled by all the big banks. Yep, exactly, exactamundo. Okay, so going back here a little bit, Janae, is it financially better to do covered calls on one expensive option or several cheaper options? It's always a good question. Honestly, I don't really know if I know the answer to that, a super good answer to that. I think it's better to, I think it's preference probably. Maybe statistically there's a better answer to that, but I think it's preference. I would rather have fewer trades open than more. I'd rather manage 5 trades than 20 trades, right? It's real hard for me to manage 20 or 30 trades because I feel like I'm just kind of all over the place. So I'd rather manage 5 or 6 or 7 trades. So for me, I would rather have some large positions instead of a bunch of small positions. Statistically speaking, which one is better and more profitable? I don't actually know. I don't know what the answer to that is. I think it would just depend on, you could always pick one big expensive stock that does nothing, whereas, 3 or 4 smaller stocks might be doing a lot. So I think it just comes down to preference a lot. It comes down to, preference of do you like to have a lot of trades open or a few trades open? So yes, good question. Jim, were there any adjustments to our group trades in the last few days? Yes, well, our option trades, not so much. I think at the start of the week, we made some adjustments and that's all posted in the group stuff. So remember, when you go to the group here and you see our links of trades, we've obviously been sharing some good Christmas pictures today. But just double check on the link. Check I post this every couple of days. We've had a lot of comments lately, but just check our trades. Have a look at them. We've done some things to Delta and to our we put our US steel trade on and so on. So just keep an eye on the list. It's all updated every single day. So just watch that. Yes, there's some new trades coming, and I'll announce those as they set up and give us some some confirmation that it's time to get in. Yeah, we've always got new trades coming up. There's always plenty of new trades, but again, we kind of come back to that preference of you know, how many trades do we want running? You know, and I would rather have less than more. And I think most people's account balance, with the exception of a few, can only afford to have so many trades running. Lenny, I was late to the Aussie New Zealand trade on 11/24. Should I wait for the next announced entry? Yes. Yeah, that trade's already in profit, about 100 pips. So just wait on that one. We'll add another position to it, and I'll make sure to alert you on that. Absolutely. Mel, are we letting AEO expire tomorrow? Again, anybody that's just joining, this is just an Ask Anything. The last 30 or 40 webinars have been very planned out. And in fact, I probably do a bad job answering people's questions. So I wanted to just make sure everyone had an opportunity to ask any question they wanted. So that's what we're doing today. So Mel, yes, we're going to let our AEO trade expire tomorrow. And you can see that our naked put that we have left will expire worthless, and we'll make some money on it. So yep, we're just going to let that expire tomorrow. But coming back, Jim, a little bit to your question, are there new trades coming? There's always new trades coming. We always have new trades. We've always got 5 or 6 or 7 trades running at any given time. What I am watching for in the market right now is this little scenario, right? We've been talking about this a bit. Guys, remember that in the S&P, whenever we've had these kinds of large spaces, that's always been pretty directly tied to sometimes a medium-sized correction, right? And so as I look at the S&P right now and I say, okay, here's the S&P right here, and it is, you know, how do you ever say a chart is high or low? Compared to what, right? Yes, we're at all-time highs. Congratulations, S&P. Who cares, right? But what does it mean that the chart is high currently? Well, one of the things that we've kind of been talking about and looking at is look at this gap from our moving averages to the current stock price. So what is that space there? And the space is pretty massive. And so in regards to kind of the new trades that I think that we have coming, I'm definitely aware of this right here, where I say, here is the S&P right here, and here is our long-term moving average down there, and the space between those is quite large. But that's okay, because this is a long-term moving average, and very oftentimes we have a lot of space in there. But when we see also that we have a lot of space between current price and our shorter term moving averages, like a 50 moving average right there, also a concern. That's a big concern, in fact. And that's a situation where I say, you know, what happened last time we had a big space between the 50 moving average and current price? What happened there, right? This is where we had this 50 moving average and price, you know, coronavirus market sell-off. What happened last time we had a pretty good gap over here? We had this, you know, no reason sell-off in the end of 2018. We had a pretty big gap here between the 50 moving average. So, you know, but I mean, you could also say, well, we had a pretty steady gap in there as well, and that's true, right? And that's true. But we're getting to this kind of really extended area where we've had this big, strong run up away from the moving average. And when we get these, you know, these gaps between the current market price and the moving average, the short-term moving average is like a 50 moving average. That's where I start to get really cautious and careful, and I start saying, I think that is where we need to be a little extra careful, and that's where I'm being watchful on some of these trades. You know, we put on a trade on U.S. Steel just a couple of days ago, at some point this week, I can't remember. This is craziness, right? But we've got a credit spread, so if this pulls back on us a whole bunch, then that's okay. You know, we're covered. We'll own the stock at a lower price because of our strategy, right? Our strategy is going to protect us against this making a big pullback before, you know, hopefully continuing higher. But when we get to those points where there's a lot of space between a short-term moving average and current market price, that's where things start to do this, right? That's where we see these kinds of movements where Amazon had a big gap, a big space between the 50 moving average and the 200 moving average and current price. And what has Amazon done and what does Amazon continue to do? It's sputtering out, right? Same thing with all of these stocks. We get these big spaces and they start to sputter. I'm not bearish the stock market by any means, but I do think we're getting to a point where, where we might see something like the S&P, for example, that's getting, in that same kind of position. We could see just this kind of action for a little while, right? That's what I could see happening. Now, coronavirus vaccine is positive. The stock market wants to get the election stuff out of the way, which is done now for the most part. I know we have some other elections coming in the next few weeks that will determine how much of a gridlock we'll have in the U.S. government. But all of that stuff, is all pretty bullish for the stock market. The stock market wants certainty. It wants this coronavirus business out of the way. It wants all this stuff. And so that's going to be bullish, but we can't ignore what we see on the charts. So going back to the question of, do we have trades coming up? We always have trades coming, but I'm looking at this stuff thinking, how are these things going to play out? AEO, this looks good. This is a trade that's going to expire worthless. Is there going to be opportunities to get in on this pullback? I would think so. Are we going to trade this bearish? No, heck no, we're not. Because we don't have the flexibility on a bearish call spread or just buying a put that we want and need to make these trades successful 100% of the time. So we're going to let this pull back. We'll probably start another trade on AEO and just go with a bullish put spread. And if it dips back a bunch on us, great. We'll just go with a little bit of a longer expiration. We'll own the stock down here, and we'll continue to ride that on upward. Okie dokie. Let's see here. Okay. It looks like two people here. Andrew Curry, good afternoon. No sound on my end, but we'll ask a few questions if not already addressed. What pairs are currently at most extremes? Andrew, I don't know how you would hear my response if you have no audio. Oh, maybe you can hear me. You just can't talk, which no one else can talk either. That's a good question, Andrew. We'll talk about that. Jim, I think you're right. The entire market has just fluttered and sputtered for weeks now. Yep. To some degree, that's true. But I mean, we've seen, a lot of the currency or a lot of the stock and option trades that we're in have been, ripping higher, right? So, I mean, we've, our AEO trade's going like crazy. Our Delta trade, it's been a little tired the last couple of days, but that's been up a bunch. We're going to get out of Delta with some profit. Our U.S. steel trade's been going pretty good. So the stocks that we're trading are doing well, but the market in general is certainly getting to a point of, indecision, I guess you could say. The exception of my trade. No, but I mean, I think we're just in a good sector. We're trading a lot of retail stuff. We're trading the stocks that have recovered the least amount in this whole recovery. The tech stocks are terrible. They have recovered a ton, and now they're doing nothing for who knows how long. Okay, good question. Andrew, what currency pairs are at most extreme levels? Well, currency pairs that are extreme levels. Euro Swiss is a pretty good one. This is why we have a trade on the Euro Swiss, is because it's at pretty extreme levels. The Euro Swiss doesn't get too much lower than this, with the exception of, the Swiss National Bank wrecking the market. If we have any Swiss people in here, you should call the S&B and ask them why they were doing what they were doing. But yeah, when we see these kinds of things, this is something that's at an extreme level. The Euro Swiss has not been, at or lower than this level pretty much ever. So we look at that and we go, currencies are cyclical. Stocks are not so cyclical. The stocks are cyclical in a much shorter term, right? They go down for a little bit, and they tend to go up for long periods of time, and they go down for a little bit, and they go up long periods of time. Currencies, currencies do both. They'll go, up for long periods and down for long periods. But in certain cases, we'll see like the DXY, right? It's back up to levels that we haven't been to for, big double top area. It came off that level that was, 10 or 12 year, or sorry, 14 or 15, 16 years back. And now it's kind of stuck in this consolidation here. And so the dollar is coming off some pretty extreme levels, but it's off those levels by, about 1,000 pips or more. Euro Swiss is, a little bit off those extreme lows. So yeah, I mean, those are a couple of good examples. Nothing else is too crazy near major extreme levels. One that I'm pretty interested in actually is this guy right here, the pound dollar. I don't like trading this ever, but again, if we're talking extreme levels, going back to the 90s on the chart here, the pound has not been in this area too much. So it's kind of like, with any stock, with any currency, with anything, we say, holy smokes, here's the pound dollar, bouncing around this area of, it's a pretty big area. It's a couple thousand pips here. But if we look at the grand scheme of it, it's certainly the bottom of a much larger range, right? And we start looking at that and we go, okay, if that's kind of more of our range there, 120 to 210. And if we said, okay, well, that's an extreme, maybe it's more going to be around 170. Still, we got a long way to go to get up to that upper area. And that's something that we want to just get into, hold on to, and let it ride. So all you have to do to find extremes is look at monthly and weekly charts, and you'll see those very, very clearly. Okay, Bitcoin. Anybody interested in Bitcoin? Anybody trading Bitcoin? Bitcoin's kind of an example of, of some of these currencies that we're seeing at these extreme levels. We've been talking about Bitcoin for quite a bit. Here was some of the stuff that I've discussed here as well. Some of these resistance levels and this head and shoulders pattern that we have going on here. So we've looked at these. Bitcoin is a great. You should own Bitcoin. Now, forget about the things that you hear that Bitcoin's going to be at 25,000 in 2 years. It's all such garbage, right? Because nobody has any idea. If to say that is a guess is such a polite way of putting it, right? It doesn't matter where anything is going to be in 2 years or 5 years or 3 years or 6 months or whatever. What matters is, does Bitcoin have a chance to continue going higher? Yes, there's a lot of interest in Bitcoin. People are buying Bitcoin like crazy. Nobody trusts the government. They want to have money to, put somewhere that the government can't touch it. Bitcoin's a great place for that, right? So can Bitcoin continue to go higher? I think absolutely. So then what are we left with? We're left with the chart patterns. So we're left with, what is the chart telling us? Now, do we want to buy Bitcoin at a massive double top, right? No, heck no, we don't. We don't want to do that. We don't want to do that because Bitcoin has, created this high, had this massive double top. And what we're wondering now is it just going to flutter here and explode higher, or is it going to come off that double top by some degree and continue up? And the question is, or the answer to that is, I have no idea. So all we can do is trade what we see, right? And the trade what we see on Bitcoin says, okay, if we're going to trade what we see, and Bitcoin is very technical, then we have to do one of two things here. We have to say, okay, here is the last double top that we had before the big one. So Bitcoin's either going to make its way down and retest kind of that $13,000 area and continue higher from there. I'd say that's a very likely scenario. Or Bitcoin is simply going to consolidate and get messy around this $20,000 level and explode higher, right? So Bitcoin, there's no leverage. We don't own it. I mean, there's some Bitcoin ETFs and so on, but I wouldn't trade those. I would just own Bitcoin. So as Bitcoin consolidates here, I would buy some now and just to get into it, buy $100 or $200 or $300 or $500. If we get a pullback to 13, 14,000, buy some more. If we get a pullback to 10,000, buy some more. If we get a pullback to 5,000, buy some more. Otherwise, buy a little bit here. If it breaks above 20,000, we clear that level, pick up a little bit on the pullback, right? If we get it up to 22, 23,000, we'll for sure see 20,000 again. Buy some more at 20,000 and continue it on up from there. Okay. There we go. Yes. There, we have chatted about it a bit, Lenny. So I hope you bought some. I know you're into that area of things. You like the techie stuff. So good. Hope you bought some good Bitcoin. It's great. Where do you buy Bitcoin? Where do you buy Bitcoin? There's a lot of places we can get some Bitcoin. Probably the most used and the most common one is Coinbase. That's a big one. I know everybody hates Coinbase's customer service because it's a pain in the rear, but what can you do? You can't win them all. So Coinbase, if you go right here and click on Get Started or Get Started down here, it takes about 5 minutes to set up a Coinbase account, and you can just fund it through your regular bank account, and you can own Bitcoin. So it's super easy to do. It's really easy. Once you get your account set up, you'll see that there's a button that just says buy or sell Bitcoin, and you hit buy. And if you have money in your Coinbase account already, it'll just pull from that. If you don't, it'll say, hey, you need to fund your account. Here's the ways you can do it. Connect a credit card, debit card, a bank account, whatever. It's really easy to do. So it's really easy, real good. Good, Lenny. Good. Andrew, tracking trades, recommend any specific apps for tracking or journaling. Journaling is always good. I don't do it. I post all my trades in the group, and I have them on a spreadsheet so that everyone can keep track of everything. But as far as my own stuff, I don't know. On the currency side of it, my FX book is a good one. I know that there are others, but my FX book is a good way to track your currency trading. But I've always, my whole idea with journaling is that's why you have an account history. Now, it's good to journal so you can see what you're doing and make notes on certain kinds of trades. Every time I do this kind of a trade, I lose money on it. But for the most part, that's why we have an account history. So I don't journal as much, but my FX book is good. Spreadsheets are good, all that stuff. Okay, yes, that's true, Andrew. GBTC, what's that gray star, gray manor, gray stone, whatever it is, that tracks Bitcoin. Okay, other questions, comments? What do you guys think? Who has not asked a question? I know that some of you, and we're talking about everything. We're talking about Bitcoin, we're talking cryptos, we're talking options, we're talking Forex, we're talking everything. So don't hesitate. Paul, any questions? Mel, Raymond, anything, guys? I want to make sure, as always in these kinds of situations, 3 or 4 people ask all the questions and everyone else sits back and listens, which is okay, but I want to make sure that everybody has an opportunity to ask questions. Mary, any questions? Anything, guys? Just don't hesitate. Let's hear it all. Clinton, questions? Ryan, does Bitcoin make more sense than gold? That's a good question. The argument always would be Bitcoin, you physically, tangibly own nothing. Gold, you could potentially have physical gold. So, is gold a safer, more realistic kind of thing? Maybe, probably. If the internet disappears or whatever, Bitcoin's going to be pretty worthless at that point. So I don't know. That's certainly a good question and a good thought. I think as long as things kind of stay somewhat together, then Bitcoin will probably perform better than gold. Gold is a real turd. I don't like gold. I don't like trading gold at all. I like owning gold. I like having gold, but I don't like trading it because it's so tough. So tough. Yeah, you can keep codes. You can store your Bitcoin on a hardware wallet and just keep your codes and access it, that way. That's true. Good, Justin. Good. Going to watch the new YouTube videos tonight. Excellent, Justin. That should give you some good ideas on more about our option trading strategy. In case anybody's wondering what Justin is talking about, these videos right here, I'm going to post them into the chat there. There's 7 or 8 videos in there about kind of the option trading basics, our strategy, and so on. I'm going to be adding another 1 or 2 videos to that list, and then I'll be doing a 7 or 8 or 9 video currency list as well. So that should hopefully be helpful for everybody. Okay. In which kind of market conditions do you occasionally buy naked calls rather than normal straight? So, yeah, so just buying a call option, just a straight call, it's got to be, I mean, honestly, these are some of the market conditions, right? I don't like this situation, Mary, and that's a good question because I think we do have some call options coming up. I don't like this. I like that we have a really strong, good uptrend, but I don't love that it's getting so extended. But in this kind of a market, this is a pretty good kind of call option market, right? Do I think it's okay to buy a call option on something like Bank of America? Yeah, heck yeah, I do. Because again, we're in the kind of situation where we have the kind of criteria here of, okay, these stocks have to, are more likely to continue this big aggressive recovery. And so, we can make a little bit more money with just buying calls on that kind of situation. So I think those are some situations that that can merit some just regular calls and being an option buyer. So Bank of America's got a couple of hurdles to get over here, and some of these banking stocks do. We look at things like Delta, and this is making a very nice run for us, a really nice rounded bottom. And it's moving, above the neckline, and it's making its way up. So, is this one a good one to buy a call option on? Probably. I just really hate buying call options, but it's a good one to buy a call option on. Now, one thing to point out, markets love to fill gaps, and what has Delta just recently done? It's filled the gaps. It's left a few gaps down here, and maybe it needs to fill those guys, but that was a big gap over there that needed to be filled. So, any kinds of pullbacks here, if we get Delta back in the high or back in the upper 30s, like 36, 37, 38 bucks, I'll probably buy a call option on Delta at that point. So, yeah. Does that answer your question, Mary? Hopefully. So, yeah, I mean, a good solid trend where things are going up pretty steadily is what we want to see for buying options. I just still think I'd rather win 100% of the time than take a chance on making a little bit more money, but taking a lot more risk. So, okay, Paul, let's see. How much do you rely on the charts to make an option buy decision? It's a very good question. That's a really good question, Paul. So lots of good questions here. So Paul, let's go back to that. Andrew, does following Bitcoin give us any other insights and other market trends? It's a good question, Andrew. We'll get to that one in a moment. James, option videos have been very helpful for this options novice. Yes, have opened an account with TD Ameritrade as Tastyworks not possible for. Good, excellent, James. Good to see you, my friend. And that's good news. Very, very good. I'm glad the videos are helpful. Option trading is the best. So it's not the best. I mean, it is the best. I love option trading. I love currency trading. It's all very, very good. Option trading sometimes is just easier to make money on. Sometimes currencies are challenging. Right now, I feel like currencies are a little challenging because the stock market is just continuing to push higher. When the stock market corrects and gets a little bit gnarly, then the currencies will be trending more and moving more and giving us a lot more opportunity. Andrew, I almost forbid you from using TC2000. That's a 1999 charting platform. Everybody must use TradingView. and I should be more open-minded to this stuff, but I'm just not. TradingView is a brand new platform that's built on all the best technology, TC2000 and stock charts and bar charts and all this old stuff. Throw it away, get rid of it. Use TradingView, use Tastyworks when possible, of course. Don't mess around with these old platforms, they're terrible. Okay, so going back to Paul's question, how much do I rely on charts to make an option buy decision? Paul, remember, and that's such a good question, I'm so glad you asked it. Remember that with our strategy, and again, the strategy is talked about in a heavy amount here on video number 7, or whatever that turns out to be in this list here. With our strategy, we're super duper okay with the market pulling back on us. So we're a lot less reliant on the charts. But we do want to see things such as, okay, here's Delta Airlines, right? Here is our, some of the charting things that I'm going to look at is I'm going to say, here's Delta Airlines before this coronavirus craziness, right? And it was trading up here in the high 50s, low 60s. So I'm going to look at that. I'm going to go, okay, we have struggled to get back to that level. There's a long way to go to get back to that pre-market panic sell-off level. Long way to go, right? So that's something that I'm going to say, okay, this has been on its way. It's bottomed out and it hasn't revisited that low. So we have a long way to get back to all-time highs. We're a good little distance off those lows. The lows seem to be put into place pretty well. And it seems like we have broken, well, it doesn't seem like, we have broken the high of the consolidation, right? This is our neckline. So here's our high. Here's all of this consolidation. We've broken that neckline. Those are some of the most important key things that we look for when we're charting for options. Number one, and this is where we talk about support and resistance, right? But where are the all-time highs, lows, right? What is our predominant pattern or kind of our controlling pattern that we have? Oh, is that 2 L's? And do we, confirmation. So confirmation is so important, right? So we say, okay, all-time highs over here. We're not anywhere near that all-time high. The bottoming out has happened. This isn't our all-time low, but this is a pretty significant low. And this is confirmation that the bottom is in place, right? Breaking that neckline. So I want to see those kinds of things when I am charting for an option trade. So, like in this example here of US Steel that we put on, we said, okay, look at this chart right here. And where is this thing, right? I mean, US Steel has been up around $200, and lately it's been bouncing around, in these real low levels, 10, 11, 12, 15 bucks. So we're coming off these lows, and we have a long way to go to even just get back to, 2018, 18, 19 levels. We have a long way to go there. And so we've got a long space, a big open area there. And so I'm happy to trade that kind of thing. If you look over here at, Amazon, for example, right? We say, okay, Amazon has been recently trading around its all-time high, and it's starting to sputter, right? And these are the trades that we don't want to get into, because these guys, will Amazon go higher in the future? Of course it will. When's that future going to be? 1 month, 3 months, 6 months? Is Amazon going to do nothing for the next 3 or 4 months? So I want to kind of, notice all of that stuff. Is something trading around an all-time high or an all-time low? I love getting into stocks that are coming off big lows and have a lot of room to run up. I don't love as much. It's nice to catch trends on stocks that have had, that are in nice upward movements, but those are also stocks that we run risk of, getting in at the top, right? And having to ride them all the way down in a bullish position, which is terrible. So to kind of go back to all of that, I count on charting to kind of find these basics. Where's our big time highs and lows? What's the controlling pattern? In this case, it's a rounded bottom, right? A rounded bottom, and the confirmation is breaking that neckline. That's a stock that we want to be in. We've got plenty of room to get to those highs. Our strategy covers us, right? If this just happens to be right here as high as Delta wants to go for the next month, that's okay, because our strategy says that's all right. We'll make money on the long leg of our credit spread on the way down into the 30s or wherever it's going to go. We'll own the stock, we'll sell call options on it and write it back up, and we'll be totally fine. What we don't want to do is get into these situations where we're buying the stock up here and we're, months and months and months go by that we don't even get back to break even. That's what we don't want. So find stocks that, that have a good long ways to go to get back up to those, to those big predominant highs. AEO, that's why we're in AEO. We've still got, just to get back up to kind of these 2018 levels, we're about halfway there, a little more than halfway there. Big rounded bottom, big neckline break. Let's go. Big answer. Does that answer your question? Does that answer your question, Paul? Does that help? That's a lot of stuff. But yes, okay. Andrew, does following Bitcoin give us any insight to other market trends? Probably, but I honestly don't know if I'm smart enough for that. And that's an honest answer. I'm not blowing it off. That's true. TC2000's great charts. Yeah, we have talked about that. Do you ever focus on Vega when trading implied volatility? Nope, I don't. Andrew, another question. I still think I like solar, even though those levels of new administration. Any thoughts? Yeah, I mean, solar will probably benefit from the crazies we have in Washington now. So, yeah, solar could be good. We'll see. I'm not doing much in the solar kind of area, but yeah, I'm sure it'll do great. I'm sure it'll do just fine with the current or new administration. Dale, what do you think of Play? Well, I'll tell you what I think of Play. I think these guys, fall into a very nice category of this consumer cyclical situation where, I mean, it's hard business to be in with to be in the business that Dave & Buster's is in, but they seem to be doing well. There's, they meet that criteria of there's a long way to go, right? A long way to go. And so I like that. So then what we have to look at, Dale, with Play is, the chart looks fine enough, right? It's coming off some big lows. The chart looks fine enough. So then what I have to look at with Play is this. I have to say, okay, let me just get a quick look. Strike prices are, a little bit interesting, which I'm a little surprised. Okay, a little bit better now. So we've got some good strikes, right? That's something we want to see. We want to see a lot of expirations. That's great. Implied volatility is high. It's a stock most can afford to own. How much does an at-the-money option pay for 2 weeks out, right? So it's trading at about 25, between 25 and 26, and an at-the-money option pays pretty darn well, right? So is it a stock we can afford to own? Is it a stock we want to own? Does the call options pay enough money out there? And they certainly pay pretty well for 2 weeks out at the money. So yeah, I think Play looks, based on those things alone, I think Play looks pretty good. I like high implied volatility options. So yes, I think Play looks really good. Yeah, it's a good one. I don't know who's going to Dave & Buster's right now. I don't know who can even legally, I mean, can they even be open? Can they be out there opening their doors? It's a good looking stock though. That's a good one. It's a good one, Dale, for sure. Okay, other questions, guys? Other questions? I'm slowly running out of oxygen here, so ask them quick, because I'm fading fast. Yeah, I know, Mel. I feel for you guys. I guess hopefully they can listen. I don't want to get political, but here's my only question, right? We, having had coronavirus in the house, in Utah, where I am, people are respecting the orders pretty well. I don't see anybody without masks anywhere I go. Everybody has masks on. Most people I know are staying away from gatherings and so on, and the numbers are going up. So it makes me wonder, how did we even get coronavirus? whatever tactics we've been using seem to not be working, but I guess nobody wants to think about that. So we stayed at home. We're not around people we don't know, and you still tend to get it. So I don't know what the deal is. I think it's kind of like running from the flu. You just, at some point you're going to get it. It's a rough one. That's true. It only takes one contact, one visitor. That's true. Sharon's still waiting to get started in FX. Okay, good. We'll get you going there, Sharon. School. Oh, are you talking, Mary? Virus getting shared in school. All of our kids, my wife and I both tested positive, and our kids, all three, tested negative. So I think they've proven pretty well that young children don't pass it along very well. They don't get it very much. So my kids were in a house for 2 weeks with 2 people that were infected, and we were their primary caregivers. So nobody could be isolated, and they didn't get it the whole time. So yeah, who knows? Okay, guys, other questions, thoughts, comments? I will not go into the coronavirus discussion too much because I would say that I have some heated thoughts and feelings about it, especially after having had it. But I'll save my comments for a pillow that I can yell into. Other thoughts, other questions? We've been going for about an hour. I'm pretty much out of oxygen here. How's everyone? Does everyone feel like we've answered some questions? I wanted to make sure that we got to that stuff. Chris, Clinton, anybody? You guys feeling good about everything? We've had some good questions, some good comments, some good details. Again, this is a bit of a different kind of webinar than we have had in the past. Usually we have a very normal kind of structured webinar, and I just didn't want to do that this time. I just wanted to answer your guys' questions and make sure we got some good stuff discussed. So yeah, I thought it was, Lenny. I thought it was good, just open forum, good way to ask questions and get down to some nitty-gritty stuff. So excellent. All right, thank you guys. Nice to be with everybody. Have a wonderful, fantastic, excellent rest of your day. And thanks for being on, guys. Nice to see you all. And good luck and everything. Have a wonderful weekend, and we'll see you guys soon. Thanks, guys. Take care, everybody. We'll see you.